Okay, we're going to talk about the stock market and try to bring some common sense and rational thinking to what's going on right now. So stick around. What you might want to be thinking about and what a rational and common sense view of the market tells us. And if you've ever watched any of my previous videos, you probably know I normally am sporting a goatee, and I don't have one anymore because if you're wearing a face mask, a protective face mask, it does not fit around a beard or goatee properly because viruses are microscopic, and that would create a giant tunnel for one to get by. And for people my age, you do not take any risks. Now, speaking of risk, the stock market does not like uncertainty. The stock market has never liked uncertainty. It's always wanted to know where things are going. And the way this stock market trades, it's forward-looking. It's about things that may happen in the future. And of course, when you're taking a long position or investing in a stock, you want to know that there's a likelihood that that company is going to be doing great and that stock is going to appreciate. That's the whole idea. When the market becomes uncertain about what the future holds, then people start selling. The stock market is based on psychology as much as anything else. Of course, there are a lot of technical factors that people look at, but even the technical factors are really based on psychology as well. So everything comes back to how both the retail investors, people like you, and the institutional investors, the people that are investing for the ETFs and the mutual funds and the banks and other large corporate entities, are thinking about what is going to happen in the market. Now, right now, there's a lot of uncertainty. And that, of course, you've seen in this big sell-off in the market, where the rally that we've enjoyed for 10 and a half or 11 years not only reversed itself, but before we knew it, over the course of a month or two, we went from being in what had been a very strong bull market rally for many years, reversing to what was a correction and then a bear market based on the percentage lost. So, what is actually happening today in the market is that although we've had a sell-off, there's still some sectors of the market who are bringing in strong revenues. And there are other sectors of the market that are seeing really enormous revenue losses. Some examples would be companies that make protective gear, like what I was talking about with face mask. Companies that make protective gear like that, their products are going to be in strong demand, not only among the average person on the street, but especially for the medical community as they deal with their institutions being flooded with patients. There are other sectors that we've seen. The grocery sector, of course, has seen not only enormous increases in sales, but unfortunately enormous amounts of hoarding of products, to the point where in many parts of the country they can't even keep products on the shelf. And some of those products, such as toilet paper, bottled water, sanitary wipes, hand sanitizer, bleach products, there are a number of them that I'm sure the company's revenues have increased recently because the increase in sales because of the panic buying that we've seen. So there are some sectors of the market where the companies may have already had pretty strong fundamentals, but their sales have taken off considerably. And so depending on what happens with this pandemic in the weeks and months ahead, those companies should have some pretty strong sales when they report next time. And depending on where we're at with the market at that time, they may see some pretty good upward movement in their stocks. On the other side are the companies that are involved in the transportation industry, the airlines and others, the cruise ship industry, the restaurant industry and bar industry, the entertainment industry, entertainment complexes such as Disneyland and Disney World. These folks are really getting hard hit right now because of this, because of the need really to stop any large event, to stop people from congregating where you are at risk of increasing community spread. And so these businesses are really hurting, and I'm sure they're going to be showing some real revenue losses during this first quarter and the second quarter. And you know, unfortunately, that's just the reality of it. Although many of them probably leading up to this fundamentally were great buys. Now, a lot of the stock market that has benefited in recent years, and we saw this last year in 2019, was the growth stocks enjoyed a certain edge over what are called value stocks. Now, value stocks often do well when they're out of favor with the market for whatever reason. And you could have a stock that took a temporary hit to their company's sales figures for some reason. They might have had a change in management. Any number of things. They could have had one quarter where they reported dividends that fell short of what the analysts predicted. And for any number of reasons, those stocks might be good fundamentally, but they just might be out of favor with the market. So traditionally, they've often been very good buys. But this last year, and during this rally, we've seen many of the growth stocks outperform. Now, I would guess that what's going to happen with this big market sell-off we've had is that a lot of very good stocks got dragged down as the market dropped so precipitously, and there were probably a lot of good solid stocks with companies that had good fundamentals that got dragged down as well. So as a person is scanning potential stocks that they might want to get into in the months ahead, those would be some stocks that they might want to take a look at. But the bottom line is, and I guess what my message is that the market is reacting the way you would expect it to. And believe me, we have had a resilient market in recent months and years before this coronavirus pandemic. We had the impeachment trials, and we had the attack by Iran on some of the U.S. troops, and then later on the killing of the Iranian general. And there may have been a time when geopolitical events like that really impacted the market, but if you noticed, the market barely flinched when those things happened. The market was so strong, the fundamentals were so strong that the market just kept right on going and continued its rally. It really took something like the coronavirus, which has impacted just about every country on the face of the planet. I believe it's impacted every continent except for Antarctica. And because of this, it's disrupting the supply chains worldwide, especially China. And it has caused, as we've seen in the U.S., massive layoffs and businesses having to shut their doors, and people out of work, and our record historic low unemployment rate, which in January and February had dropped all the way down to 3.5%, is now being challenged because there are just tens of thousands of new unemployment claims flooding the system, and at no fault of their own for those poor people that have found themselves out of work. They're obviously not going to be able to be consumers like they were previously, and so we've seen measures where both the government and the Federal Reserve have tried to step in. The Federal Reserve lowered its benchmark rate from 1.25% down to a range of 0 to 25 basis points. And they're also buying back treasuries. They're trying to do what they can to keep the credit markets liquid and not run into the kind of problems we did back in 2008. And then the executive branch, the White House, has stepped in and put together a very large stimulus package, which looks like it's going to be anywhere from $1 to $2 trillion, basically about a tenth of the U.S.'s GDP, and this is being hashed out in Congress as I speak. So these things are attempts to kind of counterbalance the damage that the coronavirus has done to the U.S. economy, and some other governments around the world are attempting to do the same thing. What should you think about the future? Well, it mainly depends on a lot of factors, but the main ones are that if people to whatever degree they can, will shelter in place as they've ordered in New York and California. If people will simply stay home, do whatever they can to use takeout, pickup, delivery with supermarkets and restaurants, change their lifestyles and behaviors, minimize social gatherings, practice social distance. If people do these things, then the medical system, our healthcare system, will not be overwhelmed. They'll be able to keep up with the numbers, the millions of people that will be entering hospitals to whatever degree they can. And if they can get a handle on this and get to the point where the numbers of new cases diminish down to a small number, if that happens pretty soon, because the economy had such strong fundamentals before this pandemic, I think we could have what could be a classic V-shaped recovery. So you know, the market and the economy fall out, and then things turn around and are robust and strong again. Now, the other two scenarios would be a U-shaped recovery, and the worst scenario would be an L-shaped recovery on a graph. And that would be if people just continue to gather, socialize, and continue the community spread. The healthcare system is overwhelmed and can't keep up, and this keeps people from working, keeps unemployment high. The economy never has a chance to fully recover. That would be a worst case scenario. So as you can see, there are some factors that really depend on human behavior that enter into what could happen in a recovery, and what we could say about what could happen with the at least the U.S. stock market. There have been reports out of China that the number of the newly diagnosed cases have dropped significantly. I don't know if that information is accurate or not. We would certainly hope it is. And if that's the case, that would be a sign that that when human behavior is changed, then the community spread of this illness is slowed down to a trickle. Now, ironically, one thing is that in China you have a communist government, and they could tell everybody you must shelter in place and you can't go out and socialize. And in this case, that's probably a good ability. The federal government is resisting doing that in the U.S. Only because of the fact that it just kind of goes against the grain for our country. But in this case, it's actually smart that some state governors have stepped up and required this, and I think it's actually a good thing, because the only way you can slow this down and stop it is when you don't have people in close contact with other people. That's the bottom line. So that's my thoughts on what the market's doing and what it could be doing in the future. It's not saying with any certainty what will happen, but again, if people will do what they're supposed to, because we did have such strong economic fundamentals going into this, as the president thinks, we do have the potential for a strong recovery. Again, it just depends on what happens in the weeks and probably a month or two ahead. So thank you for watching this. I hope you found this information valuable. If you would, follow this channel. I will try to speak to financial topics from my 38 years of experience, and also probably do some additional videos on the coronavirus, just with some practical tips on what people should do. I'm a researcher and a writer, and I read a lot of the medical literature and a lot of what doctors and researchers are publishing, so I have some insights in that area as well. So if you could like this video, and I wish you health and wellness, and we will talk to you again.